So I continue looking at interest rates with Elise Kruger, NKC, African economist Mamela Martin-King from FMB. And we were having a great discussion before because now everything is up in the air. It's no longer steady rates and then possibly a cut. So your outlook of possible scenarios for the year, Elise?
Well, we still believe steady rates for the rest of this year. And now remember, the bank target the headline inflation number. So even if core remains sticky close to 6, which I think is probably a good scenario to look at, it will still not react to the core, I think, per se, in for instance, hiking rates. Remember, the headline CPI is the one that is really the target. So if we have seen the upper turning point, for Q4 2016, first quarter this year, by the time we meet again in March, the upper end could be behind us. And, I don't think they will be forward-looking and high given something that happened in the last month. So we don't see any option for a hike. If it wasn't today, it's not going to happen, I think, in the next while, unless there's some serious wild card that we don't discuss here today. But I think, at least for 18 months we see it flat. I think the bar, as Lesetja in the past has said, the bar for dropping rates is quite high. I think they would like to see headline inflation closer to the midpoint of the target band, i.e. around about 4.5, or say at least around about 5 and lower. And at this point in time, forecast suggests that is still a way out. We could possibly look at that into 2018 if things really is favourable for the rand and for oil, and growth is picking up. A number of factors, but I can't see that right now.
So you're both suggesting that a cut definitely could be elusive for a while. And, I'm interested in what you think about the actual power of a rate cut. Because we always say, the Reserve Bank must look at the economy, must look at growth. But we had incredible low rates with no commensurate growth. So how effective would it be anyway?
Yeah, I think we need to be realistic about that bit. And I think a lot of people do say or do believe that an interest rate cut will be positive for the economy, probably in the short term. But I think what we need right now is for business confidence to increase. And once we see that, we'll see private investment increase, then we'll see GDP growth and job creation. And that's what the economy needs right now. I don't think that the solution to a weak economy is a cut in interest rates.
I was just thinking now, though, there's so many people in debt. Should we consider them as well?
Yes, and South Africans are quite heavily indebted, so a 25 basis point cut in rates, would help you on the margin. It will just offset maybe the higher tax you're going to pay after the fair budget, but it won't, really jumpstart this economy. You will have to have, a couple of consecutive drops in interest rates to really, maybe help more meaningful. But I think, as Mamalelo said, the impact is on confidence. We are having a confidence crisis in South Africa for the past probably 2-3 years. We, both consumer confidence are very low. I mean, we've got tiny pickups next month just to see another drop. So we are just muddling along at very low confidence levels for both consumers and for businesses. And a number of factors obviously impacting on that, both on the economic side, the job market, maybe the political uncertainties and ramifications. One can chat about that for a long time, but we need confidence. Once you're confident, you'll start spend. You buy a new car. If you're not confident, you're going to extend, delay that purchase and try and make a plan for maybe next year, because you're not confident about job market, about growth, about your financial position. So we seriously need in South Africa a confidence booster. And, maybe a drop in rates could just be a starting point, but at this point in time, I don't think it's on the horizon.
But not enough. So more in the realm of politicians than the Reserve Bank itself. You were talking about core inflation and what you're seeing there. And I'd like to know from both of you, what's going on with food prices? We have the rain, the drought seems to be over or about to be declared over. So when does that kick in? Because we know that food price inflation has been off the charts.
100%. I think the tricky thing here is last year we saw elevated grain prices. And what we're expecting this year is for grain prices, vegetable and fruit prices to steadily decline. But at the same time, you have meat prices that are expected to start increasing, peaking later on this year, if not into 2018. And last year we saw meat prices that were quite low, and this is because of the drought. Essentially what happened, farmers had to cull their cattle because they couldn't afford to keep them alive, and then that brought down meat prices, right? So now they need to rebuild stock, and my understanding of that process is that it takes about 12 to 24 months to rebuild stock, and in that period what that essentially means is that supply of meat is low and meat prices are going to react to the lack of supply. So essentially you have a significant portion of the food inflation basket showing signs of improvement, but meat, which also holds a heavy weight, is increasing, meaning that the deceleration in food prices that we had thought we'd see at the beginning of last year is not going to be as fast as we had thought.
Your thoughts on this inflation basket at the moment?
So I agree with her on the whole food price story. I think that's true, and also the leads and lags involved. Now, remember, we have seen the rains now, and a lot of that's still in the last month or two. Now we still need to see the maize growing, and we need to actually have the harvesting happening, and then only really second half of this year we could start to really see some impact. So that's on the food side. So I agree also with the bank saying, food prices will come down slightly slower than, anticipated. Actually, I was surprised at how high they do see it. So, but yeah, that indicates to me as well that they also see these trends, that it's not going to be this immediate down to deflation, which I think some market participants obviously do expect. But yes, overall for the basket, we are going to get the new weights on Friday. If you think about the spending period where they checked household spending patterns, I doubt whether it's going to be a significant change compared to the previous time. Previous time it was just after the global financial crisis. We were more in a recessionary mode with food spending being quite a bit higher. I think this period was a bit more stable in the economy. So we expect a very marginal impact, sort of neutral impact on the overall inflation picture as a result of changing weights and rebasing.
Thank you very much, Elise Kruger and Mamela Matingi. Thank you for joining us from FNB and NKC African Economists. And that is a wrap. So no change. And according to our analysts today, we don't expect any fireworks from the Reserve Bank for this year. But you never know. That's a wrap. I'll be back with you at 6 o'clock. Till then.